I couldn't disagree more. I mean, it's really easy to say that there's doom and gloom after the market just pulled back by 5%, but it's up 30% in the last couple of years. Earnings are fantastic. The business fundamentals are good. The economy is solid. The market's not going up because of speculation. It's going up because the underlying profit growth is there, and that hasn't changed.
Brian, your thoughts?
Well, you know, hedge funds control all the flow with respect to the business on the sell side. Jonathan and I have a long history together, thinking very similarly. I don't agree with the client on in the comments on Squawk Box. He's just, all he's doing is exactly saying what consensus is saying. And oh, by the way, consensus has been wrong since March of '09 in this incessant need with trying to call the top of the market. I'm just a simple kid from Minnesota, okay? And you can't pick peaks and troughs no matter how smart you are or how good you are. U.S. stocks we still think are the best and most consistent asset in the world. And I just don't understand why we continue to try to call these tops and bottoms. I know we love, it's our job, but you know what? Our job is to make clients money, and our job is to depict the fundamental conditions of the United States stock market. And oh, by the way, we still think it looks really good. So I think throwing out this number that stocks are going to be up 3 to 5% next year is just trying to talk your book in terms of being more negative.
So at what point then, Brian, and we know you guys have been bullish all year long for several years, when do rolling over PMIs, housing, autos, now lending, when does that start to weigh on your concerns? Never?
It's a great question, Carl, and here's what I would say. So much of our investing world has, quite frankly, become over macro, and we're not looking forward in terms of the forecast. Now, it is our belief that corporate America remains excessively conservative. They're holding back. They're so afraid to be wrong. They don't want to be right, and we think numbers are going up. If you solely focused on rolling over auto sales, oh, by the way, which is a small percentage of U.S. GDP and PMI, you're missing what's happening with respect to overall profit growth, which Jonathan talked about being very good. But I think it could actually be understated heading into 2019 because of the fearful conservative nature of CEOs. So here's when I would be nervous. I would be nervous, Carl, when people stop talking about the bear market, when people stop talking about the recession and stop trying to prognosticate the end. When everybody is bullish and we're jumping up and down having bull market parades, that's when I'll be worried.